Something important is beginning to form across Africa right now. The signals are no longer isolated. Trade systems, digital infrastructure, and financial networks are starting to align in ways that were not possible before, and this is what we've been watching for. For decades, Africa was viewed mainly through its natural resources and population growth, but now the focus is shifting towards something deeper. Integration is accelerating, systems are connecting, and the foundation for something much larger is quietly taking shape. The African Continental Free Trade Area has already begun changing how value moves across borders. Goods, services, and capital are no longer confined the way they once were. Movement is increasing, friction is decreasing, and the scale is becoming visible. In 2024 alone, intra-African trade reached $208 billion. That represents measurable momentum. But more importantly, it reflects structural activation. This is no longer theoretical. The shift is now measurable. And projections suggest something even larger ahead. By 2035, full implementation of these trade reforms could add more than $450 billion to Africa's total economic output. That level of expansion does not happen randomly. It happens when systems prepare for scale. But here is where things become even more interesting. Digital commerce is accelerating faster than the physical systems supporting it. Transactions are speeding up, connectivity is expanding, but the underlying infrastructure is still catching up. This creates a very specific type of pressure. When digital activity accelerates beyond physical limitations, new solutions must emerge. And historically, this is exactly when infrastructure evolution begins. Africa is no longer trying to enter the digital economy, it is already inside it. The real challenge now is integration, coordination, scale. And this is where the next phase begins to reveal itself. Mobile penetration alone is projected to increase by 80% by 2030. That means hundreds of millions of additional users connecting directly to digital financial systems. This is not gradual change. This is exponential expansion. At the same time, e-commerce markets are expected to grow from $317 billion to more than $1 trillion within the next decade. That level of acceleration requires infrastructure capable of handling continuous, real-time movement of value. And in 2024, instant payment systems processed 64 billion transactions worth nearly $2 trillion. This confirms something critical. The activity is already here. The volume is already real. Preparation is transitioning into activation. But despite this acceleration, the physical trade systems are still fragmented. Customs processes vary, logistics networks remain uneven, and financial access gaps still exist for many businesses. This creates a visible structural imbalance. Digital systems have already proven they can move faster than traditional infrastructure, and when that gap appears, it creates the exact conditions required for the next generation of financial rails to emerge. This is where connective infrastructure becomes critical. Harmonized regulation, interoperable payment systems, trusted identity frameworks, integrated logistics. These are not concepts of the future. They are systems actively being built now. And as these systems expand, something else is happening quietly in parallel. Blockchain networks, digital settlement layers, and cross-border payment technologies are beginning to position themselves as the connective tissue for this transformation. This is what many expected would eventually happen. When trade accelerates, when digital adoption expands, and when infrastructure begins aligning, the financial architecture itself begins to evolve. And the signals are now becoming visible. Trade reform alone is not enough. For true integration to happen, the digital systems behind trade must align perfectly. And this alignment is now becoming a priority across the continent. Payment systems must begin communicating seamlessly across borders. Identity verification must become trusted and universal. Trade documentation must move instantly, not slowly. This is what scalable integration requires. Because without these components, trade remains limited. Transactions happen, but transformation does not. And this is exactly where the next phase begins to emerge. Unified custom systems are now being developed. Digital identity recognition is expanding. Secure digital signatures are becoming standard. Each piece brings the continent closer to full synchronization. Efficient dispute resolution systems are also being modernized. Fintech regulations are gradually becoming harmonized. These changes may seem technical on the surface, but structurally, they are foundational. Because once these systems align, trade stops being fragmented. It becomes continuous, predictable, scalable, and this is what many expected would eventually happen. At the same time, Africa holds something even more powerful: resource leverage. The continent contains some of the largest mineral reserves on Earth, and these resources are now becoming strategically critical. Platinum, cobalt, rare earth elements, gold. These materials are essential for modern technology, energy systems, and advanced manufacturing, and global demand continues increasing. This gives Africa structural leverage within the global economic system, because when supply chains depend on your resources, your position strengthens naturally. And now, digital infrastructure is aligning with that leverage. The demographic dimension adds even more momentum. By 2030, Africa's population is projected to reach 1.6 billion people. That creates one of the largest connected economic zones on Earth. This means Africa is not only a production base, it is also becoming one of the largest consumer markets globally. And when production and consumption exist at scale within the same ecosystem, self-sustaining growth begins. The transformation is already measurable. Transaction volumes are increasing. Digital payment adoption is accelerating. Trade corridors are expanding. This is no longer preparation. Activation has begun. But the real shift happens when everything synchronizes. Trade reform, digital finance, logistics infrastructure, regulatory alignment, resource strategy. When these converge, the impact becomes systemic. Africa is not standing at the edge of possibility. It is standing at the threshold of implementation. The legal frameworks exist. The digital capability exists. The momentum is already visible. What remains now is alignment. The construction of connective architecture that allows value to move freely, securely, and continuously across the entire continent. And as this architecture forms, financial institutions are positioning themselves. Banks are modernizing settlement systems. Payment networks are expanding reach. Digital rails are being quietly prepared. Major institutions like ABSA have explored blockchain integration to improve cross-border settlement efficiency. Globally, companies like Ripple have developed infrastructure designed to increase liquidity and reduce friction. This is not about speculation. It is about infrastructure readiness. Faster settlement, lower transaction costs, greater transparency. This is what scalable financial architecture requires. And when over 1 billion mobile devices become direct financial interfaces, the system changes fundamentally. Banking no longer requires physical presence. Access becomes digital, immediate, continuous. When 1.6 billion people connect through interoperable payment systems, harmonized trade rules, and digital logistics, the effect will not be small. The shift will be structural. This is why the signals matter. Because when infrastructure, trade, and digital settlement systems align simultaneously, transformation accelerates rapidly. Africa's awakening will not be defined by announcements. It will be defined by systems quietly activating beneath the surface. And now, those systems are beginning to synchronize. Watch the infrastructure, watch the payment rails, watch the alignment. Because when all components connect, the outcome will reshape global commerce in ways few fully anticipate.